Hi, my name is Felix Fry.
And I'm Marko.
We're here to find great trading opportunities that target 150 to 400% returns. And you? Well, you're going to help us do it every single day. So welcome. This is the Winning Picks Podcast. This podcast is for educational purposes only. Options Geek LLC is not a broker-dealer. Options Geek LLC, Felix Fry, and Marko are not registered investment advisors. Keep in mind, options involve substantial risk and are not suitable for everyone. Please consult your own investment advisor before doing any trading. Make sure you read the full disclaimer at the end of this episode.
Hey, Felix.
Hey, Marko, how you doing? All right, good.
Good. I was going to ask you, it's been a big day today, a lot of movers.
Sure.
Have you seen something like this recently, or it's been pretty interesting?
I'm looking, I looked at the Apple news and I woke up and I just thought, man, this is an incredible situation where these EV stocks are just going to keep on going higher and higher. Apple getting in the name. I actually think long term it's probably negative for a lot of the outside names, but for today, it gives some credence to the power of electric vehicles and how it's going to be normal in 5 years. So the Apple news is, to me, it's a game changer. But when I think about Apple is software, right? They have phones. So you look at your iPhone, right? You have your iPhone and it's not made by Apple. It's made by manufacturers, contract manufacturers out in Asia or wherever. They built the software. So there's software that makes the user experience what it is, and that's what makes Apple what it is. And they're two companies that have built phones. Not built them, but actually built the software. You have the Android and you have Apple, right? And so what's the difference between this phone and a car, except that it has ultimately the car of the future will have software embedded in the car, and then somebody's just got to make the car, just like somebody's got to make the phone. There'll be a battery inside, which it seems like they have the battery of the future. Tesla's going to say they have their battery future. So maybe it's Tesla and Apple, and maybe Google jumps in there later on with the leaders in the software. It's more about the software as opposed to the manufacturing of a car. We already have that. That's already GM, Ford. They're already spending billions of dollars trying to get into the EV market, but they're having trouble with the software. They can build cars like nobody else's business, but at the end of the day, it's the software that makes all of these things work. So
it really is like a new generation coming, because for the past couple of years, the softwares within cars have improved, but they're nowhere near Tesla's level, which make it really good. And now they announced they're going to be, you can talk to people via Bluetooth who have different Teslas, and it's just a new day coming. And I can definitely see Apple actually, hopping in. And
so this is something. So Apple's up 3%, $2 trillion company. It's up $60 billion on the news. That's how you have to start thinking about these things. It's up $60 billion today because they announced this thing. Now it's maybe it could be more, right? The argument could be, well, if they're going to be the leader in the software, just like they did with the phones, and every car will have the Apple software, then it could be 500 billion, right? It could be another $1 trillion just in that. The business is that big. Healthcare is enormous. I think healthcare is an $8 trillion business. So, Apple's got a lot of things going for it here. It's a stock that has obviously done very, very well for many people, but it keeps on going. The problem I see is that there's so many of these other smaller companies that this reminds me of 1999, right? When in 1999, if a company announced that they had a website, literally like we just have a website, the stock was up 10%, right? So tomorrow Starbucks comes out and says, you know what, we've had enough of selling coffees. We sell coffees in every 2 blocks around the world. We're going to actually start selling EV cars. Stock's going to be up, 20%. So we're getting to that point where any broadcast of we're getting into this business, this EV business, shoots these stocks up 15, 20%. It reminds me very much of 1999, 2000. So Apple getting into to me, it's a game changing announcement. They've been making this they've been putting, when you look at Apple's earnings and you see research and development, and they're spending $100 billion, on research and development, and you're thinking to yourself, what can they actually be researching and developing? Well, this Titan project has been thought of many, many years ago, and they've been doing it for many, many years quietly, and hiring Tesla executives and whatnot. So I don't think they make this announcement without having something hardcore like ready, and they are sure that, Apple doesn't work like we're going to do something in 2024 and then maybe it doesn't happen in 2026. They've waited this long that they probably wanted to make it a timeline, but that they were going to be able to beat. So that's going to be interesting on how that affects the rest of the business. It does, like I said, for sure, EVs are the future now, right? It's, people are coming out and they're putting billions of dollars to work, but how much of it is going to be taken up by the big players like Tesla, like Apple, with the software? Not forget about the car. The car is just a hunk of junk, without an engine or without software. This new software, again, what's inside your Apple phone is going to be inside a car. It's just going to be a little bit bigger, more powerful to drive a car. So, I think it's a game-changing announcement today. We'll see how it all plays out.
And Tesla took a hit because of it.
It did, because it's a direct competition. And they have executives at Apple and that are coming from Tesla. So that's a big deal. But, I mentioned 1999, and I think today is a good day I'll tell you a quick story.
Okay.
So I know you always love these, but at the bank, you have a lot of smart guys. We were trading derivatives at Bank of America, and I was 20 something years old, young 20s, and I'd never made as much money as I was making at that stage in the market. Every day, everyone in the room was making $5,000, $10,000 per day just by having this personal account where you're just buying calls and buying stock on names I couldn't even remember. Okay. Might as well been, ABC stock, XYZ. It didn't matter. It was all going up. And, even though 2 years earlier, I can tell you when I was in Chicago working for a trader and things were starting to go up, he told me the stock market is like, a bull market is like sex. It's the best it feels the best at the very end. And, I said, yeah, laugh, joke around. Market goes up for like another 2 years. I'm at Bank of America this time, and it never felt better. I mean, literally, you walk in 10 grand a day, 20 grand, some days 50 grand. People are turning accounts, 20-year-olds inside the bank, turning, $250,000 accounts into $2-3 million. And I mean, I'm around everyone. We're all doing this. Everyone's trading the same names. We were long this one name. I'll never forget it because the whole room was long this name. Almost like you look at these stocks where if you had a group in the chat room, there's hundreds of people along the same name. We were along this name called, I don't even know what it does, and I don't remember. I remember the symbol, quadruple R, RRRR. And it was long. We were long, and it went from like 10 to 120. And you can imagine people made a lot of money, and we weren't buying 1,000 shares. We were buying a lot. Everybody had a lot of options stock. And I remember on a Thursday, Friday, I had gone to it might even got to like 150. It went from, because these things, they go in this type of bull market, they go 10 to 20, 20 to 30, 30 to 50, 50 to 80, 80 to 120, 120, 200, or 120, 190. And then that's the top, and they pick up this steam, this momentum. And so I just remember Thursday, Friday, the accounts, everybody's account is so big, multi-million-dollar accounts. And on top, that's how much capital there was that people had. And then on top of that, we were leveraged. Everybody you get 2 to 1 in a stock account, and you also with options, you're super leveraged. So these $2 million in capitals in an account is trading like $5-6 million. And I just remember it was a Friday. We went home. I've never been, and I think everybody in the room has never been longer, meaning owning as much money in stocks and options in our lives. And that Monday morning, there was the NASDAQ actually, the market just was opened up down 4%, 3-4%. And wow. That was a hit. But that was nothing compared to the NASDAQ was down 7%. And all these stocks that we were in were in the NASDAQ, just like they are now. They're all in the NASDAQ. And that was down 7%. And then in particular, within the NASDAQ, these baby stocks that we were all riding was down 10 to 12%. So right off, this is 8:30 in the morning, and everybody's going, oh, like today's going to be like, can you imagine like triple R or quadruple R is down, 20% already in the morning? How do we get out of this thing? And we're waiting for the market to open. The first print when the market opens at 9:31, 9:32, it opens down 10% and immediately, or 15, immediately down 20. Some of these names down 25, 30%. And you can imagine that, again, 2 million in capital is leverage trading like 4 million, and these things down 30%, 20, 30% in one day, you know, people could get hurt pretty badly, right? You can get, you forget, you know, everything goes up for 30 days. It programs you to buy the dips and keep going up. And at the end, there was no pickup, there was no bounce. And, you know, many people, the psychology really hurts people, right? Anyone. It's a very difficult thing to sort of embrace. You know, these things go way up, and then you think, okay, on the next bounce, on that morning, I don't think anybody just panic sold. We were like, all right, we'll just, on the next bounce, I'm going to ease out. There was no next bounce. And these things ended down maybe 25, 30% for the day. And then the next day, maybe there was a $5 bounce from 150 to 155, and then it trades down another 20. And, you know, an account can lose 40, 50, 60% quickly with leverage. And so a lot of people got killed just on the first week of the market crash, because it actually crashed over time. It didn't just crash. There was these sharp moves up and down, but eventually went down. You know, some of the names that were 300 ended at 1, 200 ended at, you know, trading $3. So these things can happen, right? Money is flowing in, and it can happen. For right now, the going is good, and these stocks are trading like, you know, I mean, you just look, they're all trading. We're talking about Riot yesterday, 2 days ago. It's up 30% today.
Yeah.
We're talking about Fubo at 35. It was already up that day, and I see now it's trading 57, 50. I mean, you know, we're looking at those calls to, you know.
Exactly. I was looking at the target stock prices. It was the exact ones we showed that you need.
It's not normal. They're buying those. They made money. It's not normal. This is not normal. It's working right now, and there's a lot of people that are jumping in this and compounding. But you know, I know how this. I've seen this story before, and trust me, by the end, it's not good. In the middle part, I mean, there's no reason why Fubo can't go to 120. It just, there's no reason that it cannot. You know, I've seen stocks like that move that fast, that high. You know, it's going to clear out anybody short the name, clear out anybody's long puts, anybody think about puts, and then it's going to come down fairly quickly, is my impression. Just because I've seen it before, and the history seems to rhyme. So that's what I would say. Apple to me is a game-changing announcement here. They are buying calls. People are getting involved here. You know, it's an important announcement. I think people should pay attention how that affects everything else. And I suspect over the next 18 months, this is a more of a long-term thing, that it's going to shape Apple's software and how they develop it, and how Apple progresses, how Apple wants the world to think about it. They are the leaders. They put billions behind their idea. It's how they think the world is going to be shaped, along with Tesla, and it's going to be those guys head to head to try to figure out, you know, the answer and make this a reality. So that's that. That's my 2 cents. The other announcement that I actually like, I'm waiting for puts to come in, is this Peloton.
Yeah.
You know, they bought out this company. They had problems. The New York Post the other day was trading $100, $105. The New York Post says they can't deliver actual product. You know, the stock is down a little bit, and then it's trading 161 a few weeks later. Again, not normal, but look, it happens. And the stock is now way up. People have been buying calls, subscriptions, good. At the end of the day, the positive story is a story right now. The positive story is, can they become, the next announcement is, okay, so they figured manufacturing. The next announcement is, can Peloton become Lululemon, right? Can Peloton become this brand where people are just buying not just bikes, they're buying, you know, shorts and shirts, and they're, you know, Peloton is the first leg of, or is it the first leg? The first leg of a triathlon? Is it the bike, then the run, then the swim?
Right. I think
I obviously don't do Ironman. I believe it's the bike. No, it's the swim first.
You might swim first.
Swim first. You get wet,
and then run.
Bike. You get on the bike, and then you run for the end. Right.
Right.
Okay. So they're right in the middle. So maybe they get into the swim and the running. Who knows? But the next big announcement is more of a lifestyle brand, wealth helmets. They're already doing that, so it's not going to be, you know, like brand new. But, you know, can they be the next Lululemon? Which leads me to think, let me ask you this. Who would you rather own right now? Who would you rather as a long-term, Lululemon or Peloton?
I mean, Lululemon stock is, you know, like
360. Yes. So let's just assume, you know, so some people just look at the stock and they say it's 360. That doesn't mean it's valued the same. What's interesting is that Peloton today is now worth more than Lululemon. And I think that's really interesting. I'm looking at the two and saying, man, Lululemon's a good company. You know, you walk by,
Established long
it's
term.
established, it's been around for a while, it's proven, it comes back from major downfalls to come back. People love Lululemon. It's a brand, a lifestyle, and they're into it, right? Every married woman in New York City is going in and out into the store, walking out with 6 bags. Peloton, you know, has bikes, but you know, the negative story is there's a lot of potential negatives if they don't become this negative story. I mean, you were mentioning something the other day about Peloton, and I thought it was I liked it. I liked the logic. I don't know if you want to say it. You can, you know.
Yeah, I mean, a lot of people are betting against it. They're very bearish, and I was reading an article on, I think, Siki and Alpha. It was that they think that the high churn rate of the product itself. You know, people, they get excited about these products. They, you know, their friends are doing it. I got a Peloton bike at my house. It's $2,500. Blah blah blah. It's kind of like a status symbol,
right?
But like there was back in the day. I remember I did it myself. P90X. I did a
Right. There's always a new thing. There's always a new thing. There's always a new thing.
It was a new thing for a while. Now, you know, people are kind of, you know, going away from that. Now they're jumping into Peloton.
Yeah,
it's interesting, right?
It's very interesting. There's a lot of negatives. There's obviously a positive. Is this world brand, this new way of thinking, health, fitness, bike? They have other, you know, they'll have running machines. They'll obviously do other machines now. I like the deal because it fixes manufacturing and it also gets them into the corporate business. Which is huge. You know, you have every building in New York City has big gyms. You know, corporates, they want the nice machines. So, you know, it's new customers branching into the corporate lifestyle. That's big business, and I like that. At $400 million, I think it's a good buy for them because there's a lot of synergies to build upon. $48 billion versus Lululemon, I don't know. It's up in the air. I'd actually love to hear what other people say. Peloton versus Lululemon, 48. Call it an even race right now. Who wins? I don't know. That's something that interests me. Name that we love to look at that you know a hell of a lot more than I do is GameStop.
Yes.
Stock is up huge. Call buying again, but also a big put buyer. So GameStop. Why don't you tell the story again? I mean, I listened to you, but I'm not into.
So GameStop, it's an RNC Ventures. One of the owners, I can't remember his name exactly. I think he sold Chewy, an e-commerce company, and he's very e-commerce oriented, which is something GameStop needs. He just got up to 12.9% stake in the company from under 10% just before. And
so that's why it's up today. Is that's
why it's up. That's why people are excited because, you know, GameStop. It's in malls, it's in all these different places, and it's mainly
who goes into GameStop though? Who actually? I mean, nobody goes into GameStop, so it's like they couldn't do it on the store. That's fine. Now it's going to be online, and oh, by the way, there's a lot of competition in selling video games online.
Right. The only reason they did good now is because they were selling PS5 and Xboxes physically. So that's what kind of pulled their sales up. If it wasn't for this, who knows what might have happened? And they've been closing down stores. And so just like you said, why would I be, you know, going and buying physical copies unless I'm like a hardcore fan?
Right. And everything's going digital.
Everything's going digital. And now you can buy a PS5 and an Xbox X digital versions, and they're cheaper. And you can't put a CD in them, and you just buy it online.
Yeah.
It's super simple.
It's not stopping people from buying calls. What I'm saying is like, who would do this? And is this the dream? I don't know. But I wanted to show you one thing that I did see. I mean, I looked at this. So yeah, so the put, let's look at that. Okay, so why don't you do it? So let's look at the what is that? That's January, the January 20s and the January 17s, right? Now, if you look at the open interest in the January 20s, let's look at the open interest. Sorry, in the January 17s, the open interest says 39,000, right?
Okay.
We walked in today, there was 39,000 open interest. The volume today is about 30,000. So it looks like someone is getting out of that position, right? You can agree with that? Yes. It looks like just by eyeballing it looks like they're getting out of that. And it looks like they're actually going higher to the 20 strike, right?
Okay. Yes, 41,000.
You see that? Right? And then you can go click on the 41,000. I'm sure you'll see. Let's take a look before I talk. Okay, yeah, 31,000 spreads and then 4,000 spreads. It looks like 35,000 spreads just traded today. Is that fair? Do you see? You see that? Yep. Okay, so this is someone that is long puts, and here. I don't know if they're long stock yet, but they're long puts. They're betting on the short side. The stock has come a long way. Probably asking the same question, like what's different besides a CEO from Chewy coming in and buying this stock? I mean, Chewy was helped out because it's not like the Chewy guy is an absolute genius. I'm not saying the guy's worth a lot of money, but at the end of the day, he's selling dog food online, and it's working because part of the reason why it's working is because there's a pandemic and people got dogs and they went to buy food online, and Chewy had a good way of selling it, I guess. I don't have a dog and I don't buy dog food online. So, he made a fortune, and Chewy is, once you get someone buying and you have a subscription, you make it easy for them to keep buying. Your dog needs to eat, you need to keep paying them, and you just stay on the subscription. And so by the pandemic caused a lot of people to get on this subscription product, if you will, and sort of allow every month to just keep getting dog food. Okay. He makes $1 billion. He goes and he buys GameStop, and he wants to sell this great new idea that he wants to sell, videos online. I mean, this has been done for a long time. I don't know. There's probably something more in his whole story, but you have a lot of competition online.
Yeah.
I mean,
so you have Steam. They've been around for maybe even 2 decades, for a long, long time. They got, if you got your friends there, you got all these different titles, games, et cetera, et cetera. You also got Epic Games, which own Fortnite. They created Fortnite. They made a ton of money from in-game purchases, gave you a free-to-play game. You pay for stuff in the game, like skins.
Right.
And now they're actually building their own platform, and they're giving games away free. They also got like a 10% coupon, $10 coupon. Like, okay, I'll just tell you a story.
It's just easy to it's easy to get videos online.
It's super easy. I just paid $5 for a $60 game with Epic Games. Why would I ever think about GameStop if they can't give me that? Plus,
and when you buy something, you're in sort of their platform.
I'm in their ecosystem. My friends are on Steam. I got games on Steam. Why would I ever, So
right. Okay. So there's a process to get people over. It's tough. It's not easy. Now there's closing down stores, so they're going to save a lot of money on the stores, but that money is going to have to go on advertising to get someone like you to go play at their site.
Exactly.
Hard thing to do. So now I'm looking at this and I see this 40,000 options. So let me show you my screen here.
Yeah, looking at it.
I just pulled it up here. So let's see. Sorry, let me try one more time. You got it? There we go.
Yeah.
Okay. So here's my screen. So here's GameStop. So we're looking at GameStop. So I just go to holdings and I clicked on GameStop, GME, and I want to see who might be long these puts. So I can see here Susquehanna has puts, but Susquehanna is a market maker. So they're going to have puts and calls because they're also, they're broker dealer. They're also, I think they have like a asset management, but they're a broker dealer. They're going to trade options on every name. It's not something that you can get information from. This guy has 800 calls. That's nothing. But we're looking for puts. JP Morgan puts, Goldman puts, but those are, again, broker dealers. They're making markets. So you go down, and if you go all the way down, don't look, all the way down, Melvin Capital.
Their only position.
Wow. Only position is 5.4 million shares worth of puts, which is 54,000 puts. Wow. Okay. So the guy you are, by the way, this guy's this guy's not a slouch either. Maple Lane. They're excellent. The guy's great. Considered, a lot of people don't know this guy. His name's Leon. He's, a pure trader. He's very, very good. But now, instead of just being a trader, he's a big shop. Multi-billions of dollars, and he has a whole team, and he trades a lot of options, and he's very, very good. Formerly from Galleon, so he's very, very good. He has a position, 10,000 puts. I don't know if they're still there. It's September 30th, but I know this guy's still there because he's the only guy going to be trading 54,000 puts. So the guy you're fighting against is Melvin Capital. So who is Melvin Capital? It's a guy. Let's just go look over here. Just going to show you. You can just Google. So on a lot of these things, you can just go Google Melvin Capital, right? They have $13 billion, $7 billion as of June 18th. I think they have a lot more these days, to be honest. I saw something. I think these days it's probably, that was 2019. I think it's like $13 billion now.
Oh, okay? Wow.
$10 billion. So
they have
a lot of money. Yeah, the guy was, okay, so who is this guy, Gabriel Plotkin? He was Steve Cohen's, one of his best analysts, if not his best analyst. And then he left to start his own fund. Steve Cohen, obviously, is Steve Cohen. And he's one of the best traders of the last 20 years as far as returns go. But Gabriel Plotkin worked there and uses options, and he is short GME.
Mhm.
He's not. He's very, very good. This guy is very, very good. You know, it's just important to understand who you're betting against. This guy's not a slouch. I mean, they're on it. They understand the business, and you know, he's short. Now he's short, and he's probably long a lot of other. You could just go click on his. This is not allowing me to, but for whatever reason, it's not allowing me to. But you can click on. Usually, you can click on here, and you can see his portfolio. I'll get it to you right now. So it's. I know he's long Fiserv. Okay, so you look at oh, they're gonna make me play. Well, you can look at Fiserv. You can see Melvin Capital. I'm not gonna do this right now, but you can see Melvin Capital's holdings, and he's long Fiserv. But you can just go down and see that he's long a lot of puts. He's long other names, you know, retail oriented names, but you know, this particular one he's short, and he's really, really good. So he's a guy that, you know, I would be worried to bet against too much, because he has the ability to be right more often than not, and using leverage here. Now he's using puts, maybe because he believes the other version is he's using puts because he sees that he doesn't want to be, you know, he's making a decision to use puts versus calls, versus stock, shorting stock. He's making that conscious decision. So he must understand clearly that this has the potential to rise, you know, on a short squeeze. And when you're buying, you know, in the money puts, what you're really doing is buying the protection that the call is giving. Okay, so buying an in the money put, and remember, you know, in 3 steps, you should. One of the most important lessons that I give in 3 steps is called the options puzzle. And by understanding the options puzzle, Marko, you're going to understand when I say that when you buy this in the money put for $3.30, that you are essentially shorting stock and buying this call. It's the same thing. So by buying this in the money put, you're essentially shorting stock, you're betting it lower, but you're also buying this $20 call. Okay, that is very important to understand. You know, it's maybe confusing the first time you hear it, but in the options puzzle, I think is one of the most important videos in 3 steps that oftentimes gets overlooked. And I want you to keep on. I know we talked about this. Keep on going over that. It seems simple. I've laid it out there in a very simple way, but you have to really do it over and over to really prove it. You got to prove it to yourself, and you got to make sure that you understand that. So here this is Melvin Capital. So when he trades this, I mean, we talk about unusual options activity. When he trades this, you know, we see it 5 minutes after he trades it, and that's pretty interesting, right? We know Melvin Capital just rolled up 35,000 puts, so 3.5 million shares. He still believes in this short. He still believes the stock is going lower. How much lower? You can look here, you know, 14.5 is where he's thinking. He's probably thinking 13. More 13, right? 13. Let's see here.
14. Okay.
14. Okay. 14. Yeah. Because again, it's more of, it's an in the money, you know, more of an in the money option. So it's simply, you know, 330. I would say it has to be 330 because it's not, you can't even multiply it twice because it's leverage, because it's not as leveraged as the other ones. It's not a multiplier. So 14 is going to be around the right 14. I would say 14 and a half. That's what he's thinking about. Probably lower though, probably lower. I mean, that gets you a certain amount, but he's probably thinking closer to 13, 14 is my guess. So the question is 13, 14. Now you go to the chart and you say, you know, is what he, you know, he's thinking 13, 14. Is that possible? Well, the stock has obviously just jumped so much. It's jumped huge in the last, you know, talking today, but it was just 13, 14, 5-6 days ago. So yes, this guy just bought 10%, a higher stake. This is a company that's facing enormous competition. It's got to close down stores, going to shore up capital. That's good. But you run into this behemoth, which is the internet, that anyone could sell games, including Amazon, whenever they want. And this stream that you talked about. They
also have their own platform. Yep.
Yeah. And so this is something to watch. Obviously, if he wanted to short the stock, he could, but he's not. He's choosing puts, which means that he is nervous about a potential short squeeze. And I can tell you that, you know, you got the guys over at Wall Street Bets and 4chan that they are, you know, on this name. They love this name. They feel like they're fighting the big guys, and they're at war with Melvin Capital. So this is going to be an interesting one to play out. So that's GME. What else are we seeing? What are you seeing?
What else we'll be seeing? Let me see. I've been seeing some TDOC.
TDOC, yeah.
Really
Coronavirus names.
Yeah, yeah.
What do you see there?
TDOC is interesting because I was looking at it for maybe like a week now, and there's some volume, but it's up, and it's been up this year for like I guess like 140%. Whatever, it got a merger with Livongo, a chronic care company, and they're trying to get as many people into their ecosystem as possible. Now Amazon is also getting into this industry of
Yeah,
remote health, whatever. And I mean, if you want to fight Amazon, you're going to need some big firepower. So
sure.
I'm just looking at it and I'm curious to
Yeah,
see.
I mean, I don't see that much. It's such a high price stock that the average person's not going to be able to buy that many options here. So it's a $205 stock with a 50 vol. You can buy 1 week options, and not really what we're doing. I would, I don't know. To be honest, I don't look at anything over $200 to $300. It's hard to buy options simply because one lot is going to cost. You go out to April for earnings, and one lot's going to cost us a lot of money. $20 per option, $19. That's $1,900 for one option. So, just in general. But I hear you. If you wanted to play it, it does. I know the name coronavirus obviously helped this one out, and I think people are trying to find ways. I see airlines, people are paying attention to coronavirus because airlines are down. UAL, Dallas, Delta Airlines, and American Airlines is down. We have names like DBX, Net, Fastly up. So people are starting to flow into more of this coronavirus. What if this work from home stuff gets another, a second leg? But TDOC is I don't know much, but it chart wise looks pretty damn good. Looks like it's held off this. Okay, we're getting this vaccine. Everybody knows we're getting a vaccine, and now TDOC maybe is here to stay, so wants to push higher. I don't know. I don't know. I don't know enough about it, but I get what it does. And it's probably here to stay. So this is a good chart. That's what I would say. Period. This is a good chart. It's a healthy chart. Right. It's a healthy chart where it goes up like this, does this for 4 months. I'd love to see 5 to 10,000, 230 calls being bought. And then I'd get a lot more excited to say, all right, I should start paying attention here right now, even if it's a $4 or $5 option. So, all right. So TDOC, how about one that I see that, has lost a lot of love is
Uber, right.
Uber.
Yeah.
A lot of love lost in Uber. But it's had a nice, we got long Uber for the election. That worked out nicely for people. Some people have emailed me and said they still loved it. And I know that they continue to buy calls on it. The stock is trading well. This company is something that, came out as an IPO here. I mean, this is a large company that is not getting the love that everything else is getting. But this, they got through the California legislature that went through. In November elections was good. Since the November election, 44 seems like the floor.
Could you just inspect it?
And so you get, sorry. So my inspect, sure. So you got 44 as the floor right here, came out bouncing, and this is trading very well for, call it a new stock. I mean, this was bad for quite some time, and a lot of it had to do with this California issue. Let's just go back. I'm going to go back for what are about 1 year. So 1 year, you go back 1 year, this California thing happened right around here. Coronavirus hurt it. But in this process, they became very good at Uber Eats, right? And so yeah, the taxi limo type of business, has really come off. But in this process, they got so much better at Uber Eats and every other thing that they were trying to do to make the story something that investors would digest. So this one, I think has some legs, and I did see it. The reason I noticed it because today I saw some call buying.
And their competitor DoorDash actually IPO'd recently, and they've started down. Yeah.
Dash, yeah, it traded up from there, but it's another big IPO. But here you're starting to see, call buying. This is the 1 month, but January call buying here. picked up. Now the open interest is high, 35,000. So I'm not sure if they were overriding and this is buying back, but this is, you know, something where, you know, they came in, they bought 3,500, looked like they were a repeat buyer over here. So buyer, stock continually trading higher. That's what I'm looking at. Implied volatility up. This is telling me, excuse me, just to read that chart correctly. This is telling me a buyer. This is showing me that the implied volatility has been going up. So it looks like he's bidding. He goes to buy. He pays a higher vol. The stock is also going up, which makes sense. If you're buying calls, you know, 3,500 calls, and these are probably a 35 delta option. So you got to buy 175,000 shares of Uber, and the stock trades up. So it makes sense. Call buying, calls trading, IV up, call buying, stock up. Tells me that the deltas or the person who sold those calls had to buy stock. He's pushing the stock up here. After that, stock comes back off. I'm sorry, the stock trades sideways. The IV comes back off, and then again he comes back in, and it looks like another 1,500, 2,500 options trade. IVs go back up as more people are following here, possibly them if they're nibbling at the option, and the stock is going up. So that's how I read it. This is clearly a buyer. The only question I have is right here, that 35,000 open interest. I would have to go back in time and look to see when they traded, if they were bought, if they were sold. Is this someone that sold those 55 calls and now buying them back because they see Uber getting momentum here? Maybe at 55, you know, now we want to back out the target stock price, right? If someone's buying the 55 calls, paying 250, where do they think the stock is going? You know, let's try to figure out where that is. Hang on one second. So 55 calls, if I'm looking at $63. So if I'm paying 249 right now, then, you know, with an 80% confidence level, my confidence level could be lower or higher, but 80% is about right when these guys are coming in to buy. Remember, they're buying options with the highest confidence. So 55 is around the 55 strike at 249 would need $63 target for these guys in order for them to buy it. If they're covering, then it's also likely that they think this, otherwise they would keep it short. So I think that 63 is what the market or whoever that buyer is sort of interested in. And if we look, let's go back in time because I have I'm going to look here just to get back to the, okay. So here it traded above this level 47. This was a big level here. It held at 44. So I think anywhere above this 44 to 47 range, you might find new people coming into this name to take Uber and everything that Uber has done over the last year that's new, Uber Eats and being a leader there, being obviously still a leader in taxi and limousine. This looks to me that it's a brand new day in Uber. So starting right here, this is a brand new day in Uber stock.
Brand new level for Uber.
Yeah, a brand new day. Forget about what's happened here in the past. Okay, forget about all this. This right here with this much volume, this is a brand new day, and it keeps going, and it passes the IPO. Remember, this is where we're in IPO. This is where everybody sold it, blah, blah, blah. The insiders and Uber's overvalued and blah, blah, blah. This is a new day. This is California has some issues. This is coronavirus. New day. Okay, this is a new day, new volume, new day. If you were going to get out, you probably got out. If you're a long-term holder, you're probably still in there. You've done this, and now you're here and not trading well. I like it. I think it looks interesting. I'd love to see the market go down one day, maybe, and, you know, have this thing start trading back down to test this 44 to 47 range. But I think you're going to find buyers if it gets to this level right around here. Okay.
Cool.
Good. What else?
I got a question from Steve D. He's asking, what do we think about Pfizer and Moderna?
So the beauty about these names, you know, Pfizer is almost a buy the rumor, sell the news type of situation. So for young investors, and I don't know, Steve B might be a more very experienced investor, but, you know, there's always, you know, a lot of sizzle, no meat, you know, when the state comes, you know, so you buy the rumor here because they have this vaccine. They're going to announce, they come out with a vaccine. Everything is great. They're going to rule the world, and the stock drops. Now it could drop because drops to the ground on TV when they get the needle, that doesn't boast a lot, doesn't make me feel confident to go and get this vaccine shot. I'm watching. I think the world is watching, and you get into Chicago, and 4 people in the hospital, like in emergency suites after taking the vaccine. It's not good. It's not a good look. So you have this vaccine that was coming. Yes, they did it. Stock trades up on the news and then just trades straight down, because what else positive can come out of Pfizer? Everything is forward looking. So what else positive can come out of Pfizer over the next 6 months? I don't know. Maybe they improved the process of freezing. I don't know. Same thing with Moderna, right? Moderna is mRNA. Same story, right? It's, story is that they got this vaccine. It's going to pass. It's good. It's good. It's good. It's good. It's good. It's going to pass. It's going to be great. They can sell. At this point, you're counting how many vaccines they get to sell. You're doing the math, 500,000 times, 5 years times the growth of, in and out, maybe 2 shots. Everybody's doing this math, and they're getting numbers out to be 300. And the reality is that the news comes out and stock trades from 180, 175 down to 125. I think it's going to find some love. This right here was a big day. I think it'll find some love. Probably it could easily 95 to 110. I think to take shots in this may not happen, over the next week. I'm saying that it could trade around here, maybe trade 140. But you see this, I call this the mountain. Right now, it was climbing the mountain. It's on the wrong side of the mountain right now. Okay, that's how I look at it. So I don't like stocks that are on the wrong side of the mountain, because stocks on the wrong side of the mountain, they have to actually prove themselves to get back above this level, and it becomes very difficult. But this isn't a mountain, right? This is just sort of something. This was the first mountain. I'll tell you that. So from 20 to 85, you're like, oh man, that's a ridiculous level. Comes back down, you're like, okay, I don't know if I want to be long here. Then it overtakes this and then starts trading sideways, and now it's trading sideways like this. This is no longer the mountain. This is just a plateau here. This is another mountain. Does it go to 500? Well, it's got to reach 180 first. It's got to stick around 180 to 120 probably for 6 months. And then if it, call it 8 months from now, when it's back to September or something like that, and this looks like a plateau, then this is the first plateau, this is the second plateau, and then it can go to 500. Right now, to me, it's on the wrong side of the mountain. Okay, but you look at Johnny John. Now, what's the story on Johnny John? Johnny John hasn't announced its vaccine yet, so it's still in this phase, if you will, like a Pfizer was. Okay, here, if you think about Pfizer here, okay, that's where Johnny John is right now, where they are still in trials. They are still have the possibility. There is this story that they could come out with a one-shot vaccine. Obviously, that would be incredible. That would be incredible to do. So, you have this possibility that Johnny John becomes the best option to get this vaccine, because it's got one shot. You don't have to freeze it like, you see people handling this Pfizer thing. You got to spend $25,000 to actually freeze it at the level it needs to be frozen. Then it takes 3 minutes to take it from there to put it over here, and then another 2 minutes. Otherwise, it's no good. I mean, what could go wrong, I guess, right? I mean, it seems like everything can go wrong in that process. You got 5 people touching something that it has to be frozen at every point. If Johnny John's one shot comes and the efficacy rate for Johnny John is high 80s, close to 90, forget it. Stock is going to be up on that day $16. It's like a sure shot. It's like it's going to trade a lot higher. Now, prior to that, people have been buying January calls in Johnny John. So prior to that, there's still a story. There's a what if. We can sit here and we can say, if Johnny John has this one shot and it's 90% efficacy rate, it's going to trade 180. It's going to trade 190. Oh no, I think it'll trade. Look at Moderna. Look at Pfizer. It'll trade 200. It's all a story, and that story is what gives these things legs. And the same thing after Johnny John announces, if it is 90%, I would say it probably has a lot more legs, because it will be the one that everybody probably wants. The demand will be huge for that. But if it's just 70%, 75, the market may trade up that one day like it does the Pfizer. And, you know, you're talking about the room that you have is 154, 132. It's shown, call it 135, 132. It's shown a $20, $18 to $20 range, so it could move $18 to $20 higher. Okay, so there's no reason it can't, right? This is 20 bucks, 18, 20 bucks from here if it comes out with something good, or even if it doesn't over the next 4 weeks, if there's rumors that they're about to announce, if there's rumors that they're going to announce early because they already got all the information they need, you could see the stock trade 153 to 165. It's got to break this, and then the rumors take their own, you know, the story takes on its own life, its own way of moving higher. So I think Johnny John is the one to own now because Pfizer and Moderna already are out there, and all you see are the warts on the process and people dropping out of their seat during an interview. That's not something that makes people go, oh, this is, you know, something that I want to do immediately and I want to get it. And, you know, I think people are waiting for the one shot. Johnny John, you know, maybe there's something a little bit better. I don't know. You know, it's all stories. So that's my take on the Moderna and Pfizer. Nothing wrong with the names. They have obviously done a tremendous job. It's just it's always a market's a mechanism of how much was built into the price already. And when the actual event happens, they get the vaccine, then there's nothing left. There's nothing left to say, you know, until maybe 3 months from now, until they get an improvement or you see some numbers or something. But for right now, that story is lost a little bit of its legs.
I see. Okay.
All right.
Good. Thanks for the input.
Awesome. Anything else? What else?
Real quickly, I just want to make a quick interruption and tell you all guys that we're at 997 subscribers on YouTube, and we need those 3 more. So if you guys could help us out, subscribe, like, share. If you like what you're seeing, comment, let us know. We really appreciate it. We're doing this, you know, to help as many investors as we can, you know, change their way about looking at options. And, you know, Felix is getting out of his way to teach people how to top 1% trade options, buy options. So if you could do us a favor, subscribe to the YouTube channel, follow us, comment, like, it would mean the world to us. So
you tell him, Marko. That's it. You tell him. You're the general here.
You want to hop on UOA and kind of, you know, get an overview of what else is moving? Because I've seen a lot of EV stuff just going crazy.
Sure. Any questions you have so far? Anything that you want to ask? You can take a question if you want outside of UA, and then we can finish off with the UA.
Yes. So what were we looking at? GME with that spread, right? Big guy, big spread on the puts. So I was kind of looking at, you know, if there's a spread between some certain strikes, how do I actually get a exact target stock price of what he's thinking? And if I look at spreads to play the game we're playing.
Sure. So one, I would say that in general, the top guys in the world are not trading spreads. Okay. They're trying to find opportunity in buying calls or buying puts. That's what they're trying to do. Okay. They'll trade a spread if they have to actually roll down. Okay. So I'm going to show you here. Let me pull up my screen, just get this GME so I can look at it. But these guys they're not generally doing put spreads. Okay, he's doing a put spread here because he's rolling. That's different than just saying, I'm going to do a put spread in GameStop. He's doing a put spread to roll his position. Okay, he has the 17 puts. He's looking at the 20 puts, and he wants to roll up. Okay, so he's basically saying to you, this is how you can actually think about, in this case, we got 13 and a half, 14. He's basically saying the 17s aren't going to work, right? So I'm not going to pay $1.70. I own them right now. They're worth $1.70. If I think the stock is going to 13 and a half, how much will they be worth? 3.5. Okay. 17 minus 13 and a half they'll be worth around 3.5. Do you follow?
Yes.
Okay. So if they're going to be worth 3.5, if I think it's going to 13 and a half, I don't want to own $1.70 option to make $1.80. It's not what I want to do. It's not what they want to do. It's not how they think. I'm always telling you that they're buying options because they want to make multiple times of what they're thinking. In this case, he's probably thinking around 13 and a half, 14. And the reason we knew that is because we used the board here to sort of say 14 and a half and get to about 13 and a half with some confidence. But if he's going here, he's saying to us, he's signaling to us, this one is better. They don't just, I mean, it's 35,000 options. He's making a decision that this one is better than this one. So at the 335, I want to own the 335. At 14, it's going to be worth six, but I'm already in the money 1942. So on a leverage basis, I will make around 270. Okay, that's one. Here at 14, it's only worth 3. So I have $1.70 to make $1.20, and the stock, the option is $2.40 out of the money still. So 240, which is about, what's that, 13%? So 13% out of the money. And then I needed to go to 14 because I'm not going to make any money. So really 14 is probably the level he's looking at, 14, 13 and a half. And he's not going to pay on an out of the money option. He does not want to own something worth $1.70 to make $1.30 or even $1.80. That's just not what they do. They're not buying out of the money options to double their money.
Okay.
Okay.
So can I see that he's rolling out of it by looking at volume and open interest, right? And that he's
in this case, it's easier because it's so big. It's so big. So obvious, it's clear. Right? It's obvious. It's clear. 35,000, and you can go see the holders, and you see that he as of September 30th, he owned 5 million puts or 50,000 options contracts. So this is clearly him. Okay, it's rare that you can pinpoint exactly what it is. Not rare, but probably 10% of the time you can say, oh, it's him. It's actually him. He's doing that right now. What does he have against it? I have no idea, but he's doing that right now. For all we know, there might be bonds in GameStop that sometimes. Here's an interesting take. I don't think this is the case, but I think that sometimes when you see big out of the money put options, people are doing what's called a capital structure trade. Okay, so I'm not going to go into it. Actually, maybe save it till tomorrow. It takes a little bit of time. But what they do is they actually buy the bonds. It's like a capital structure arbitrage. They buy the bonds of the company. The interest rates might be high enough to pay for that they're going to get paid on a stream of those payments. And what they do is they go buy the actual puts or a certain amount of those puts. And they basically say, we're going to take a lot of the premium, a lot of the interest that we're going to get. We're going to buy puts. And we could get into this situation where, we're actually, the stock could go down. The puts could be worth a lot of money, and the bonds are still going to get paid off. So it's this capital structure arbitrage. That's a general gist, but sometimes it's that. I don't think this is that. I think he's actually thinks GME is going to, the story we said is it's going lower. So here, yeah, I think that's how you do it. Now, in other, there is times where you will see 5,000 spreads trade, and people, every once in a while you'll see spreads. It's not generally what these guys like to do, but every once in a while you will see it. What you're trying to do in these spreads is, again, you pay $1 on a 5-point spread, you pay $1 to make 4. That's 4 to 1. One way to look at it is comparing it to, if let's take $100 stock. Okay, so you have $100 stock for a second. I'll go back here. So you have $100 stock. You are looking at the 95-90 put spread. That might be worth $1, let's say. What you have to really look at is the comparison between that put spread and how much it would cost, or where you can put the money in on the actual put. If the put costs 2.25 and that put spread costs $1, then you can buy less puts. So what is the break even between the two? Here you can only, $1,000 can turn, say this is the put is $2. $1,000 can only turn into 5,000. So you would make $4,000 here. $2, if the put was worth $2, where do you make $2,000, $4,000 on the put? It would have to go to, you would buy less. So you would buy 1/2. So it would have to go from 2, 4, 8. So it would have to be worth 10. So then you can use your break evens. Instead of 95 to a 90, you would have to look at 95 to 85. Okay. And that's where you will break even. So that's what you're playing against. Do I buy the put, or do I outright, or do I buy the put spread? The other thing you got to think about is getting out of the position. And, anytime you have different legs, in a position, there's bid offer that you have to take into account. It's not free. Trading is not free, even though Robinhood will tell you that it is free. You're trading against someone, and when you're trading against someone, that person needs to make a little bit of money. And in options, they are market making and they are moving things around. And for I think this week we plan on putting something together to show how the market makers are making money. That trading, just because you're trading for free, it doesn't necessarily mean that it's free. Someone is behind the scenes trying to make money off of your order flow. We'll show people how that works. I think that would be interesting to at least see what they're doing. So I hope that answers your question. But I would say, 90% of the time, the big guys you're going to see, they're not buying call spreads or put spreads. You could do that. It does save a little bit of money, but in the event that you're right and the stock does drop or it does go up or whatever direction you're looking at, the big guys, they're playing for that big move. The last thing, it's more painful for them to not capture that big move than it is for them to lose a little bit of money buying some calls or something. Okay. So you buy some calls for $1 and you can make $4 on a 5-point call spread, and the stock gets taken out. Go do that with Pinterest, right? We were looking at that and skew was very low, so the calls were big. So people like, oh, you could buy this call spread. Sure, you buy that call spread, you get 4-1, and then the stock jumps $40. And if you would have just bought the calls are now 9-1, right? It's more painful for a hedge fund manager to miss that. DBX, potential takeout. Go buy call spreads. Go tell a big guy, go buy some call spreads in DBX. They'll tell you, what if it gets taken out? Why would I spend $1.50, $2 to buy a 5-point call spread? I'm going to make 1.5 to 1 if it goes from 22, 23, 24 to 30. Because I buy the 25, 30 call spread. Why would I do that if the stock is taken out and it's 40 and I could have bought the 25 calls for $2.50, $3, and now I'm getting, 15, 5, 6 to 1, and if it goes to 50, a lot higher. This is how the thinking goes. You got to compare the call, what you'll make on the call and what you'll make on the puts on the call spread. So you're comparing. But again, it's that notion that things happen after hours too. And when you have a call spread, it's a lot harder to manage. When you just have calls and after hours something happens, you can actually trade stock against the calls. The options market is not open, but there's ways to trade stock to lock in things. That's something else that we'll talk about tomorrow. Maybe tomorrow. We'll leave that for tomorrow. What do you say?
Yes, definitely.
Cool. All right, so let's go through the reading the board here a little bit as we head out here. Again, volume. I'm looking at volume and I'm looking at implied volatilities higher. Things that stick out. We've talked about Peloton. GE, I think, is a stock that has some momentum back. It's getting into the groove. They have a big power. They have a lot of investments in power and energy, clean energy. So it might be part of the trend that it's trading up. So that's something to look at. Facebook trading like a dog the last couple of months, but it's in this pattern that potentially could be positive. We talked about GME, Apple, big news. This RIOT, we've talked about how high that could possibly go up and what people are targeting. That's interesting. These plug, interesting. These are all call buying and they're big. This is not messing around. 200,000 this is big call buying. You see Uber here, FireEye, we talked about yesterday and where this can go and what's happening next year. Again, continue buying and call buying, and it's big size. Fuel cell, Walmart. Walmart's trading like a dog just because when everything else is moving higher, Walmart trades like a dog. Blink. So when you can imagine when momentum goes down, people will flock back into a Walmart. So this is a little bit of a defensive play. Blink. What can you say about Blink? Just go look at the chart. There's nothing really to say. They keep buying them. Again, these names that you're seeing, they are 200, 100, 150, 200, 109. They're supposed to move this much. Okay. The market is saying they're supposed to move 15, 20%. We said yesterday, 207%, divide that by 16 is about 13 times. So 13%. So this market is expected to move 13% today. Today it moved 29%. So it's higher than what's expected. So the volatility players are probably happy to sell 200, but then when it trades 30% a day, not so happy anymore. So that's a volatility game. But 150, 149, 100, you could just see which are the crazy names, and you could see that it's important to sort of to sort of think about, what it is you're buying. And on a bad day in momentum, a lot of these names will get really hurt. So just switched here. You have a couple of names like NCLH, which is Norwegian Cruise. That's, again, goes with the airlines, and you'll see that on the next page. American Airlines was down. I saw earlier Delta, 25,000 in Norton Life. I would look at that. That one's, it's spots because there was a call buyer in this one, and they were right about a month and a half ago. So just out of memory, I would look at that because the guy who came into that seemed to be right. Mm-hmm. Rite Aid, trading like a dog. It's, this lithium, interesting because of, I think there's another thing. Apple's new announcement I wanted to take a look at later today had some, there was something going on with their technology and what that meant for them. I don't know if it was lithium but there's something in that announcement I want to take a look. You see Chewy here. This is a little bit of balanced here. Stock is way up. Stock is down today, and there's a balance of puts and calls. It looks like that could be a change. So I'm looking at that. I would look closer at that. Shopify. I mean, what can you say about those names? These SunPower, CSQ, First Solar, here, 3 in a row. They roll up. Big news there. Ballard Power, Enphase, all going to be up. And Enphase is a little bit different, right? It's showing puts and calls. So something to take a look. Usually when you see this, it's potentially hedging and sort of managing the risk reward here. This, whatever this is, NXTD, I won't look at it. It's $1, but that's different. Yamana Gold up here. Just, this is a $5 stock. I won't look. Etsy, Lemonade. This is one's going to change the insurance business. Mm-hmm. That one chart and this one is, I mean, it's blockbuster on Lemonade. This is a blockbuster chart. This is, 95, 45, makes its way back to 95. That's a 45-point difference, 45 and 95. Could see legs to 140, right? When it breaks, this is a clear breakout on good volume right in here. This is, you want to see it come back to 195. I don't know why, and I don't know why it would, but when it does, that's really the test right here, 95, 100. I want to see it come back here, not so sharply, sort of, come down in a little bit of a gradual, kind of hold this level. And when it starts making another move here, sort of, that's when you're probably going to see call buying again. Mm-hmm. That's what I got today, buddy.
Cool. Great.
All right, man. Listen, we'll talk again tomorrow. Short week. So tomorrow is our last one, and then Thursday we'll have a tape session. But I think we're gonna put together something pretty good on the other side of the trade. Like, who's on the other side of your trade? How do they make money? How are they? I don't want to say manipulating. How are they trying to make money off of your flow?
Okay, great.
Off your free flow. All right.
It's gonna be fun.
Thank you. Good, man. All right, we'll talk later.
I want to thank everybody. We got 1,000 subscribers, 1,002
nice.
subscribers. So thanks for pushing it over the 1,000 limit. And just let us know what you want to see. Like, comment, subscribe. We're there for you, and we're looking forward to the next episode. All right. Thank you, everybody.
Be good, Marko. Take care.
Thank you, Felix. Bye.